Morning, Steve Free in Chicago with the morning grain comments. Well, we had some icy conditions this morning here in Chicago, so everybody just kind of slid into work. Today is USDA report day, and 11 o'clock will be a lot smarter than we are right now. USDA is not expected to throw any surprises at us. We've been talking about the numbers for a month, but they always have a few surprises for us. And so, to me, the surprise would be if they estimate the corn and soybean U.S. December 1 stocks lower than the average trade guess. That would add some uncertainty to the marketplace. We also note that they could actually estimate U.S. winter wheat acres less than the average trade guess. So to me, that's the two surprises. I don't expect them to change either U.S. or global carryouts that much, and would kind of keep us, after the report is over, in some of these price ranges that we've been trying to keep in over the last month or so. Yesterday we saw a pretty big break in wheat prices. Some rains are expected to move across most of the southern plains. The reason you grow wheat down there is one rain can make a crop, at least this time of year, so that offered some resistance to the market. There was also some rumors that cheaper European feed wheat might be brought into the United States. I mean, right now the price differential doesn't warrant that, but certainly the rumor might have offered some resistance to the corn market. Overnight, prices are just a little bit lower as we wait the USDA's numbers. Weather-wise, looks like this range should help the southern plains. Rains in Argentina may continue to raise concern about their crops, and the Brazilian weather forecast right now is pretty favorable for their crops. Funds yesterday, they were sellers of meal and corn and wheat and bought soybean oil. Going into the report, they're still long beans, meal, oil, and short corn and wheat. What's kind of interesting that in talking to one of our consultants this morning, they were a little disappointed in the new president's press conference yesterday. He didn't focus on tax reform or stimulus, but the issues that he focused on were not really top priorities that he mentioned during the pre-election candidacy. So the dollar is quite a bit weaker this morning. Our consultant says that without tax reform, without stimulus, the stock market is vulnerable on the downside. So, this is going to be an interesting 100 days for the market, especially how much premium we put in some of these markets after the election. We also note that things like coffee, cocoa, sugar, cotton have been percolating up on the upside. And when asked the consultant, is this something supply and demand, he said no, this might have something to do with the weaker dollar, might have something to do with talk about inflation, and might have something to do that there's money out there looking for something that is cheap, not necessarily bullish, but cheap. So we'll have to kind of watch and see how all this side unfolds. There's a lot of moving parts based on the U.S. election and what happens in the first 100 days. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.